HCLTech climbs after delivering first quarter numbers that were slightly better than street expectations. The constant currency revenue declined 1.5% versus expectations of a 2% decline. Management tells CNBC TV18 they expect the second quarter to actually be a growth quarter.
Tire stocks like MRF, Apollo as well as Seat, all of them climb in trade after MRF becomes the latest company to announce price hikes. They upped the truck tire prices by around 2%, passenger car tire prices by around 3 to around 7% effective 18th of July.
Zomato gains after it increases platform fee in key markets to 6 rupees versus 5 rupees in order. Morgan Stanley says every 1 rupee hike in platform fee aids adjusted EBITDA for food delivery segment by about 5 to 6%.
Pharma gains almost 4% on news that the board will meet on 18th of July to consider a proposal for a buyback.
GET&D gains after it bags a near 500 crore order coming in from Power Grid.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu, and it's a good start to Monday morning. The global cues were fairly positive. We have the Nifty that's holding with a gain of around 50 points. The broader markets as well doing pretty well. Advanced decline ratio in favor of the bulls. The only problem pocket has been the Nifty Bank, so that's going to be the swing factor for the remainder of today's trading session. Hey, Mangalam.
Hi, Nigel. Nifty Bank is slightly weakish, and we've seen Reliance come off the highs as well. Yeah. Reliance is actually at the low point of trade, so that's something we'll watch out for. It was one of the top contributors over the last few trading sessions in terms of an up move. The intraday chart of Reliance comes up for you. Nifty Bank is absolutely flat. So IT is doing a lot of the weight lifting in today's trading session. Let's see where we go from here. So good time to get in our technical expert of the day, Shivangi Sarda of Motilal Oswal, joins in for a quick view on the market. Shivangi, we've seen a big rally that continues. Do you think the Friday's move was a bit of a breakout and we move past that, or maybe we see some sort of resistance at levels that we are at currently?
Very good morning, Mangalam and Nigel. Thank you for having me. So we've definitely seen that Friday's move was quite a mover. We've almost touched 24,600 odd levels. And after the consolidation of the last 9 sessions, the index has come out on the daily frame. On the week-on-week basis also, it has been making higher highs from the last 8 weeks, which consistently suggests that supports are being bought into very smartly. The Nifty put-call ratio is also sustaining near about 1.3 levels, which indicates that, put writers are comfortably making a base even at the higher zones. And we are seeing follow-up action. Although after the gap-up opening, we are seeing some sort of range-bound move in the intraday swings. So, of course, the intraday traders are having a tough time, but overall buy-on decline to continue over here. And we are expecting 24,750 and then 5,000 marks here in the index, and with a support of 24,250 levels. Now, talking about Bank Nifty, here is the main consolidation and range-bound move which is happening. Now, the Nifty index has been led by the IT stocks, of course, but Bank Nifty is witnessing the same lackluster move from the last 6 to 7 sessions. We are seeing some sort of consolidation, and this is to continue over here. Very small range for Bank Nifty. We are expecting 51,750 to 53,000 levels in this index here.
Okay, all right, Ash, Mangi, good morning and good to see you in. What about individual stocks? Give us a couple of ideas.
So individual stocks, my first pick would be on India Mart. We've seen that this stock has given inverted HNS pattern breakout on the daily frame, and with excellent volumes over here, which are being added from the last 2 sessions. Now, interestingly, in the July series so far, we've seen 32% open interest addition over here on the long side. And overall, the stock is witnessing a good up move, maintaining its key exponential moving averages here as well. So this stock is to move upward and onward. We are recommending a target of 3,030 levels over here, with a stop of 2850 levels. Now, the second pick on radar is ONGC. We've seen that, this stock has given a yearly breakout. Even, on the monthly basis, we've seen a Poland flag pattern breakout, which has the implication of, for the next few months as well. But, talking about immediate point of view, the daily frame also looks quite positive with a divergence of RSI here. If we talk about the open interest addition, we've seen around 22% in this series so far on the long side. So this stock is also set for a new up move towards 330 levels with a stop of 305.
All right, Shivangi, I wanted to ask you about NBCC. You know, that's been a stock that's been in a bull market of its own. Fundamentally, there are various arguments that are put out there. It hit a 52-week high last week and then it corrected a little bit. Today as well, the stock was down more than 2%, and from the lows, it's seen a bit of a bounce. Any view on that one at around 190 rupees?
So this stock, on a yearly basis, it's given around 140% odd percent return so far, and it's just been a half a year. But overall, if you look at the immediate basis, chart structure looks quite positive. It's consolidating at the higher zones, although follow-up is slightly missing. So this, there is a possibility that this stock is going to go, range bound and then get ready for a fresh move. But definitely 200 is the next level on cards over here in this stock, and then 220 positionally. 185 would be a support to watch out for.
I'm wondering if you also track some of these cash names, say, Godfrey Phillips, for instance, up around 12% today, has again been one of these big movers, over, 100% move in this year itself. Over the last 2 years, it's a near 200% move. Do you think, it's too hot to touch right now, or maybe it is a fresh breakout?
This stock has consistently performed from the last 6 months. We've seen a V-shaped recovery here. And of course, on the weekly basis, it's just coming out of its higher band, the consolidation band. So definitely stock is a good pick right now. It's surpassed its previous cluster zone of around 4450 levels as well. So definitely looks quite positive. And with any minor dip, we can, enter into the stock with the next target of around 4700 levels.
Okay, all right. Thanks a lot for that, Shivangi. Well, let's slip into a short break. When you come back, we'll continue to focus on markets. Actually, before we slip into that short break, let's go across to our colleague at Money Control. Madhu is joining us to give us a stock that she's tracking rather closely. Madhu, take it away.
We are talking about Capital Small Finance Bank that had a tepid debut in February, and the stock has underperformed thereafter. Capital Small Finance Bank operates mostly in Punjab and few other northern states. Unlike other small finance banks, it lends to the middle income group. While growth had been sturdy in the past, it seems to be picking up in recent times, and the recent disbursement figures are also encouraging. The bank has a completely secured loan book, and its agri lending is also to the middle income farmers who do not come under the ambit of loan waiver, and the exposure is fully backed by collateral. On the liability side, the focus is on granular. With an improving CD credit to deposit ratio post the IPO, the bank is now looking at gradual uptick in net interest margin. The next area of focus for growth is also going to be non-interest income. While costs are likely to remain elevated for a while, we see gradual uptick in return on assets. Post the correction, the valuation is now looking reasonable.
All right, that is Madhu Chandade from Money Control Pro giving you an idea for profit. Just before we slip into a short break, keep an eye out on something like an LIC, which has seen a bit of a spike. It's moved to the high point of trade, and giving it company on the way up are a couple of these rail names. Once again, Texmaco Rail, for instance, has moved higher to the high point of trade. Take a short break, come back, focus on a lot of these stocks which are buzzing around. Welcome back. The Nifty Bank has suddenly taken off right now. In fact, when we started the show, the Nifty Bank was mildly flattish, or sort of, just about in the green. Now you have a big move that we're seeing out there. What are the stocks that are doing well? We have SBI, which has moved to the high point of trade. That's been doing well for the Nifty Bank itself. But to cause a sudden spike, we had to see a couple of these private sector banks do well. So we have ICICI Bank. That's the intraday chart that should come up for you on the screen. And alongside that, bring up Kotak Mahindra Bank as well. So both these stocks have moved well just in the last 10 minutes or so, and taking the Nifty Bank higher with a gain of almost 150 points. So just keep an eye out on Kotak Mahindra Bank and ICICI Bank. The intraday charts of these stocks come up for you. Will be very interesting to see whether HDFC Bank has also seen a bit of an up move. Well, it's not quite moved as well as these others, But, if this does spike further, this could cause a bigger gain on the Nifty Bank, considering its weight on that index itself. So we'll keep an eye out on all these stocks as we're moving towards the end of today's trading session. But Zomato is the other one, Nigel, that I'm looking out for, because, I don't know whether you've ordered lately or not. You would notice that they've increased their platform fee from 5 rupees to 6 rupees.
I've ordered, but I forgot to notice that.
1 rupee, that's exactly what the company is betting on. 1 rupee does not seem like a big difference for people to, order, because it's just about half to 0.7% of the average order value. But on an average, the company orders almost 85 to 90 crore orders per year. So 1 rupee increase in that could actually aid their food business EBITDA by about 85 to 90 crores. So this blended increase can actually take the contribution margin higher by 20 basis points, adjusted EBITDA for food by about 5 to 6%. That's Morgan Stanley's calculation. But more importantly, the net impact on financials should be seen in context of the discounted prices they have for Zomato Gold as well. So this 5 rupees to 6 rupees jump has happened for everyone. But at the same time, those who were paying 60 to 180 rupees for Zomato Gold, they have been discounted as well. A couple of days ago, when they were celebrating their 16th birthday, they were giving Zomato Gold for 30 rupees for 6 months. I took that. So I saved that 30 rupees there. So that 1 rupee additional has to be looked in context with the kind of money that has been, saved because of these discounts that they're giving. So with all of this, the net impact could be close to around, 1 to 2% of the EBITDA. Irrespective of all of that, the point is that people are monetizing. The operating leverage in their food delivery business is improving, and quick commerce is doing extremely well.
Yeah, and I think that this rate has gone up from, 2 rupees to around 5 rupees, which has now gone to around 6 rupees.
Yes,
right?
So we need to also understand whether this is dynamic or this is static, because that 2 rupees, 5 rupees has gone to 6 rupees. But if you order on New Year's, it actually is 9 to 12 rupees as well. So they do this in a dynamic basis. And if you order on Blinkit, in recent times, you would see, if it's raining, they would have a rain surcharge of close to around 30 rupees, etc. as well. So let's see how this pans out. But for now, this 1 rupee increase is a step in the right direction, and as a result of which the stock up 2.5%.
Thanks, Mangalam, for explaining that to us. Earlier, we spoke to Vineet Sambre, head of equities DSP Mutual Fund, to discuss his top sectorial picks. So let's hear out what he has to tell us.
At every interval, one should always be thinking about one is growth, and then after a strong growth, one should be thinking of how to protect capital. Last 2-3 years, because of growth and followed by a lot of liquidity, we saw these up moves taking place across the segment. Now, most of the market is either expensive or very expensive. You don't have stocks which are really cheap in that case. So I would say that at least be focused on quality. Till the time the liquidity is driving the returns, it's good. But in any case, there are some issues which leads to market consolidation. Then also, I think we should be in good hands is what I believe. I think fundamentally, what drove decent outperformance in the market was also, on the back of very strong earnings growth, which itself is likely to see some bit of consolidation going forward on a high base. And anyways, some parts of the economy is still not, in the best form today. So I think considering all of that, we'll have some slowdown in the growth. And from that perspective, ideally, what you mentioned, market should see some consolidation, or at least investors should moderate their growth or the returns expectations from the market.
Okay, time to slip in a short break. We come back, we continue our focus on markets and stock-specific action. Welcome back. Well, just keep an eye out on a few stocks that should come up for you on the screen. Whirlpool, that stock was in the red. Now it's in the green. It's up close to 1.5%. And there's a swing of around 3.5% on that one. LIC Housing Finance as well as another one that's moving very, very well in the last few minutes. So just keep an eye out on a couple of these names. They're in a world of their own. But let's get to an exclusive conversation with CNBC TV18's Latha Venkatesh. The RBI Governor, Mr. Das, spoke about the stock markets, the proposed tightening of project finance rules, extension of its tenure, and a lot more. Let's listen in to a few excerpts from that conversation.
Whether it is stock markets or the bond markets or, so many components are there, so many segments of the economy. We look at what spillovers they will cause. Now, so far as the banking sector is concerned, we are very closely, we monitor all banking, meaning the credit sector or the credit growth, all that is, this segment is concerned. We very closely watch this position. In fact, much closely than it was, a few years ago, much more closely than a few years ago. And whenever we see possibility of whenever we see some early signs or whenever we feel that a few months down the road there could be a problem in this particular sector or subsector, we act. And an example is the unsecured credit where we took action last year in November. And we increase the risk weights and the results are there to see.
Okay, that's exactly what I'm saying. See, the F&O volumes was something that troubled government, RBI and SEBI. And SEBI has appointed the Padmanabhan committee on it. So do you have this fear that bank money could be fueling the stock market rally? And therefore, is there a case for higher risk weights or even to keep the interest rate, on watch?
You see, so far as bank money going to sort of create some, giving some boost to the stock markets, etc., is concerned, the exposure limits of the banks to the stock market, individual borrowings from, let us say, NBFCs, which were very high earlier for participating in IPOs or for going to the stock market, the IPOs or for FPOs, whatever. Even there we have put a limit of 1 crore. It was all done some 2 years ago. It's not something we did yesterday. So therefore, at the moment, so far as from the point of view of the credit sector, there are no major concerns.
Okay, you don't think fresh controls are needed? And
in any case, banks have their own, end-use monitoring. Only some amount of, you can say, some amount of unsecured credit may go into the stock market.
Exactly.
May go. But so far as unsecured credit is concerned, we have already come out with, we have provided for additional risk weights, and the overall growth of unsecured credit has started moderating.
So you don't think more is needed?
That I cannot say. As and when something is, because it all depends on the numbers and the future outlook. So we keep on constantly evaluating. As and when some measures are required, I can assure you that the Reserve Bank will be proactive.
Okay. You're not done with risk weights?
Depends on how the situation plays out.
3 members, external members, their last meeting is in August. And then I think your term is December, Patra's term is till January. The whole NPC changes. Not just for that reason, but that is a very good reason to continue you. So that there is continuity in the NPC and, a job well done. Why should the government disturb? Have they intimated to you anything at all?
See, it is like
we would like you in Win Street. That's why I'm asking.
It's like this. When there is an assigned, you see, first thing is institutions are bigger than individuals. Whether it is the Reserve Bank as an institution, or it is the monetary policy as an institution, the institution is bigger than the individuals. The institutions develop their own momentum, their own discipline, their own principles, guidelines. So institutions will always continue to function. Now coming specifically to this thing, you see, when I am on a particular job, I focus on that job. I am not distracted by other things. Or to use the analogy of cricket, when I am out there batting, I rather focus on my batting and not think whether I am there in the next match or not. So it's that way.
But they have not intimated anything at all about, the post-December person in RBI or your position. No intimation at all from the government.
No, I think, it's again, the question is, I think I said it elsewhere also. As I told you, I'm just focused on my batting currently. Okay. Indication, no indication, it doesn't matter to me at all. I am currently in a job. My focus is completely on that job. I try to follow the principles of Arjuna, remain continuously focused on the job at hand, and not get distracted by anything else. And I'm not saying it to sort of make it a kind of a cliched answer or anything. This is what I really mean.
Let me come now to the banking sector questions. The two obvious things that the market is waiting for from you is this project finance provisioning. You have raised it to, you want it raised to 5%, and once the project is completed, even then it is coming only to 2.5%. Standard loans is only 0.4. So you're really asking for a very big provisioning. Is there any chance it will be softened?
You see, what we have given out is a draft circular.
Yes, it's a draft.
In fact, we are now adopting in our regulations, we are adopting a very, very consultative process.
Yes.
And in fact, in the annual report also, if you recollect, or you may have a look, or your viewers may have a look, in the annual report for, last financial year, there's a separate box item, there's a separate annex, where we have listed out all the regulatory measures which we have taken, the number of regulatory measures which followed a consultation with the stakeholders.
Okay.
So we are now actively consulting. There is a consultative approach for regulation making. So this is also a part of our consultative approach. What we have put out is a draft circular. We have started receiving comments, and based on the comments that are received, we will examine the comments, and then we will come out with a final circular. The purpose of the draft circular is to adopt a consultative approach to get out external inputs and examine them with all seriousness.
See, this is not a discussion paper. This is a draft regulation. It's
circular.
almost ready to
It's
go.
a draft circular.
So the fear of the industry is that you won't tweak it much.
It is a draft. We have said
it is a draft.
So when I say it is a draft, I am not saying that we will not tweak much, or I am not saying we will tweak it so much. It's a draft circular, and our approach is consultative. We take this consultative process very seriously.
All right, interesting, insightful conversation with the RBI Governor, CNBC TV18 exclusive. Before we wrap up, there is a news at the bottom of your screen, a near 1,000 crore order coming in for Ashok Leyland from the Maharashtra State Transport Corporation. In their overall scheme of things, not a very big number, but a positive indeed in terms of a 1,000 crore order win that they've got, and as a result of which the stock has spiked to the high point of trade. That's all the time that we have on this edition of Chartbusters. Stay tuned. We have Trading Hour coming up next. But as we do that, top business leaders and newsmakers gathered at the CNBC TV18 CII Budget Town Hall last week to put forth their expectations in the upcoming budget, a higher capex allocation to spur consumption, incentives to boost skilled manpower were some of the demands that were put forth by the industry. India Inc. also pushed for the sunset clause on the 15% concessional tax scheme for new manufacturing companies to be extended by 5 more years. Let's hear them out.
Consequent to COVID, we have seen the cost table, and a lot of it because of external factors has actually gone up. And because of that, there is a challenge on consumption across the world. As far as rural is concerned, given that cost of everything has gone up, what CII is recommending is that the amounts through direct benefit transfer, the amounts through Manrega, and income tax at the lower end, below 20 lakhs, there should be some relief in, and all the other areas should be increased.
Our last 5 years have seen the early benefits of schemes like the PLI scheme. There have been some mistakes along the way also which need to be corrected. I hope we see a version 2 of that, and while we know the budget is for the year, but I hope there's a direction for the next 5 years. What industry needs is a clear glide path of what to expect over, say, the next 5, even 10 years, so that they can invest with confidence. Second, around jobs, getting jobs and skilling. We were just talking to somebody over lunch, and you can't get people, because most people have gone home, and how do you get them back? I think this is another big challenge for industry.
This 15% income tax sunset clause, if you can push it back by another couple of years, or maybe give it a 5-year push, I think it's going to play extremely well. The external environment is positive today. If you look at the environment in terms of interest rate, they're going to fall. You go look at the, despite all the trouble in the world, energy costs are almost flat. You can't ask for a better environment, but we now need to capitalize and move forward.